All right, we're going to kick things off. First Republic, fallen like a knife that Nate just put in the chat. Still feeling the hurt from posting less than ideal earnings on Monday. Rumors spurring of the bank divesting of around $100 billion in securities and mortgage assets. The bank reportedly making strides to strengthen its balance sheet after its little slap on the wrist, or more like an intervention from the big boys. Here at First Republic, it's in a rough spot. It's trying to dig itself out of a hole. Do you think it could turn around at all?
I have a hard time believing that at the moment. This is one of those situations where they're going to have to sell probably $100 billion in assets. So maybe that'll help, address the situation. But this is another one of the examples of the moral hazard of monetary policy of the last decade and the monetary policy of the previous decade, right? The idea that banks really had to really do anything for a solid 12 years. And then when interest rates rise, it is always, always, always a conservative asset that ultimately leads to crisis. People think that like Bitcoin and that type of speculation is what would lead to contagion. No, it's usually something simple. It's usually land. It's usually speculation around something that we all need. And in this case, people are saying like, "Well, what about tulip bulbs? Look at what people were willing to trade for tulip bulbs, like things that we need." The valuations of those things went absolutely through the roof. So in this situation, you look at this is one of those situations that have been created by policy where the bank can effectively say, bail us out, or the outcome will be much, much worse for everybody else. That has not gone away from our financial emotional EQ, if you want to call it, over the last 20 years, and it's on full display once again.
All right, Mark. We also saw Mark Sebastian. Hello, Mark.
Hey, how are you?
On the show. Hey. All right, Mark. Look, we also saw the regional bank ETF KRE down 3% yesterday. Should we be trading regionals like tulip bulbs, or should we be sticking with the big banks?
Well, I mean, the big banks are definitely going to come out with, I think, the winners out of all this because of some of the fear in these mid-cap banks. But it appears to be pretty targeted. You look, First Republic is a disaster, but PacWest reported pretty decent earnings. It's up nicely this morning. Some of the other banks have not had some of these problems. So, if you're willing to put a foot out on some banks, do your research, and listen to a guy like Garrett, and put some money behind some of these banks that are probably not going to go out of business. There is I think, a ton of upside. So this is one of those opportunities where you've got to pick and choose your winners. The KRE index is going to slide with First Republic, but it's going to create a buying opportunity for the banks that don't go belly up. Those banks are going to come out of this stronger as well.
PacWest, it's a really nice looking setup, Mark. I know that they didn't report ideal earnings, but however, the stock is up $1 pre-market.
Mm-hmm.
I would like to see this one move a little more to gain some traction here, because this could be one of those candles that just fizzles out. Watch PacWest. You're right. Garrett has been on top of that as well. Listen to Garrett. That's the name of the game.